gracious. Okay, so today we're going to talk about four reasons to buy a house now. Okay, so we're sitting here in July 2011. Has it been a good time to buy up until now?
Yes.
Well, maybe now we're a good time to buy, but last year not such a great time. Not bad, but not a great time. Year before that certainly really bad. Now knowing what we know, 2 years ago at the time we probably thought it was okay, it probably stabilized, right? But you never know. Now we're sitting at just about the bottom of the real estate market, the best I can tell, best we can tell. So let's describe first things first. How do we know when it's a good time to buy?
Interest rates are low.
Okay.
Prices are low.
Interest rates low. Okay, interest rates down. Where are interest rates right now?
4.5.
Okay, so we're looking at 4.5% to 5% for a 30-year fixed mortgage. That's historically low. Yes, ridiculously low. My mortgage right now is at 6%.
Yeah.
I would love to have mine at 4.5%, but at 6%, it's still pretty darn good. I'd actually refied from 7% down to 6%, and that's still considered fantastic. So over the life of this loan, 6% is pretty damn good. 4.5 to 5 is even better. Okay, so interest rates are low. That's one good reason, right? Okay, and then what was the other one?
Prices are low.
Home prices are low. Okay, so you've got two great reasons to buy. Low house prices, low interest rates means low house payments. And low house payments for the next 30 years, which is pretty cool, right? Any other reason why now is a good time to buy?
It's a good investment
It's a good investment. Why would it be a good investment?
because you're buying at the top of the market. Or I mean at the bottom of the market.
Okay. Okay, so now is a good time for investment. Is there any evidence in the market right now that says it's a good time for investment?
Yes.
What is that?
Those two factors, low interest rates
These
and
two
low
factors?
home prices, and the way the market is, it's pointing towards inflation, which means high interest rates looming.
Bingo. So everything in the economy right now is pointing towards interest rates coming back up at some point, potential for inflation,
Super high.
which means that these numbers right here are not going to be there for very long. Is there anybody buying in this market that would tell you it's probably a good time to buy?
Investors.
Yeah.
Bingo.
Exactly.
Okay, so here's the great part. Investors are out in force. We're looking at probably 30% of the sales that we're doing right now in the Tampa Bay area are deals being done by cash. People buying houses cash. A huge number of cash deals going on. So I will tell you right now, the investors have done the math. The investors are doing the math. The investors have seen the numbers, and they're saying it's a great time to buy a house. So there's a lot of people out there that are a lot smarter than I am that are doing the math in a bunch of different directions from a business standpoint and from a commercial business standpoint, and they're doing the math and saying, now's a good time to buy. Take my cash out of wherever it's floating around, drop it in a house because the house value is going to go up, probably. Okay, let's talk about the real estate cycle. Okay, is now a good time to buy a house? When do most people buy a house?
When they're getting, you mean in life, in their lifetime?
In their lifetime.
When they're getting married?
Okay, when they're getting married. Okay. When do most people get on board to buy houses? When do they get really excited about buying houses and people come out in droves to buy houses? We just saw this.
When the interest rates start to climb, isn't it? Remember in
It can.
2005 and 4?
Yep. Yep, absolutely. So let's take a look at our typical real estate cycle, okay? Real estate cyclical. Cyclical just means it goes in a circle, it has its ups, it has its downs, and it's going to continue to go around, okay? So here's a fun scenario. Some interesting points in the real estate cycle. You've got obviously the peak of the market, the bottom of the market, and then you've got that in-between transition zone on the market, okay? Most people in the business, most people that are looking at getting a house, most people get excited about buying a house. When is that? Do you remember Cabbage Patch Dolls back in the 80s? It was the 80s, right? Yeah, 80s, Cabbage Patch Dolls. So when did people get on board with Cabbage Patch Dolls? Everybody else had one. Everybody was talking about it. There was scarcity. Nobody could get their hands on them. Everybody was all whipped up into a frenzy. Here's when people were buying Cabbage Patch Dolls. Everybody's got one. All the neighbors' kids have one. I've got to have one. My kid's going to lose his mind if he doesn't have one for Christmas. So you have people getting tackled in Kmart. People getting killed buying a Cabbage Patch doll. Real practical, right? Okay? Cabbage Patch Dolls. Where are Cabbage Patch Dolls now?
In the garage.
In the garage, in the attic, stuffed in the basement. They're dead like the yeah. Okay, so what happens is most people get into this frenzy and they start to get excited about buying a house when the market's starting to go up really high. This is when people get excited about buying stuff. You'll notice the stock market. Google started off down here, right, in their stock, and then it got to a point where people are like, well, I don't know what's going to happen with it. When Google got up at $150 and $200 a share, that's when people were like, oh my gosh, we got to get on. Boom, and they drove Google right up to 300. So the people who got in down here are the people that made the money. They went from $28 a share, $22 a share, up to $300 a share. Okay? So investors typically get excited when they know it's a sure thing. They know we're good. They jump in and they buy like crazy from here to here. Right? When do they sell? We just saw it. Okay? Market's going down, right? And the seller's like, but, they can't get their brain wrapped around what to do with the deal, what to do with the house, where do you do it? And when it's in a full free fall right here, okay, what is this? For us in the Tampa Bay area, this is 2008, okay? In 2008, we're looking at a free fall. We dropped almost 20% in value up and down this corridor right here in a span of 1 year. Everybody gets freaked out. When do they start selling their houses? They sell it when it's lost, okay? So they're buying at the peak on the upswing, and they're selling on the downswing because they're scared. Everybody's jumping ship, so we all jump ship together, right? That's the typical cycle of how buyers buy houses when it's really exciting, everybody's talking about it, and then they dump it when everybody's freaking out and running. Okay, so when are the investors buying? The smart people buying. Smart people are buying through here, right? The bottom of the market, they're picking up properties. What are we looking at right now? 30% of the properties that are being bought right now are being bought by investors and or cash, people looking for long-term investment. That's what we're looking at right now. It's when the smart people buy. When they get done snapping up all the good properties, the savvy home buyers start picking things up, right? And then what happens again? Things start going. Everybody's safe, we know it's good, it's been going up for a while, and then the people start buying to run that peak up, okay? So where are we at in this cycle? Well, here's 2005 for Tampa Bay, 2005, peak of the market. End of 2005, we're looking at a 4 and 5, 6 month supply of homes. We're looking at 13,000 homes available in Greater Tampa Association of Realtors. We're looking at almost 3,000 sales per month. That's the peak of the market. Absolute top dollar. In 08, the exact opposite. We're in free fall mode. Nobody's buying. Everybody's selling. We're sitting at 25,000 homes on the market, 23,000 homes on the market, and about a 25-month supply of homes because you're selling less than 1,000 a month in January of 08, February of 08. Total free fall mode. When we drop down in through this section here, where do you think we are right now?
If there was a clock, I'd say 25 after.
Okay, so here's 09, here's 2010. I'm going to say we're probably right around here in 2011. Now, can this flatten out a little bit? Sure, so let's look at what the real estate market's probably realistically going to look like. This is all well and good, but things don't run in a perfect circle. So let's look at what our real estate market and our market return is probably going to look like, okay? Here's probably more what it's going to look like. Okay? Probably a little bit more realistic. Again, 05, 06, okay? Just starting to see the hint of things going down. 07, free fall mode. 08, dropping like a rock, right? 09, still moving fast. 2010, slowed down a little bit in this corridor in the last year, last 12 months, from now backwards, we've only lost about 5% of value in this corridor, which is pretty good. I think that's great compared to the 10 and 15 and closer to 20 in 08, okay? So we're looking at 2010, 2011, we're already starting to see flattening out in our immediate corridor here. In January, February, we were average home sale was around 120-ish. Now we're looking at last month, we were around 150-ish. Now does that mean home values have gone up? Not at all. But what it does mean is the lower end of the market, all the stuff at the bottom, the $30,000 and $40,000 and $50,000 properties, $80,000 properties, $100,000 properties, they're being snapped up by the investors one right after the next. There's not that many out there. So what happens? When the 120s are gone, people are picking up the 130s. When the 130s are gone, they're picking up the 140s. So the bottom end of the market is being bought up. If you pop a property in the market right now under $100,000, just saw this last week, you're looking at 5 offers. When that thing dropped to 100 grand, there's a ton of people out there with a search saying, if it comes in the market, it's less than $100,000, I want to buy it. They had 5 offers on the property in less than 8 hours. 5. So is this a buyer's market or a seller's market right now?
Sellers.
Based on the math, based on the numbers, based on the fact that when you put a property out in the market that has equity, it gets bought up immediately, it's a seller's market. When you look at the math, you're looking at a 5.5 to 6 month supply of homes right now. It's swinging towards a seller's market. Now, here's the key component. If you take out the short sales and foreclosures, we're looking at probably closer to a 3 month supply of homes, which is definitively a seller's market. So here we are sitting in a market where everybody says the market sucks, and what they don't realize is it's swung back to a seller's market if you're not a short sale or a foreclosure property. That's pretty exciting, but nobody's talking about it yet. Everybody's scared to talk about it because nobody wants to hang their reputation out on the line and get burned.
Well, the only thing you hear is on the news, they're getting ready to release another bazillion foreclosures. So everybody's thinking we're not done with the foreclosures and the bottom of the market's still down here somewhere. We haven't reached it yet.
Right. I just read an article last week that basically said that the shadow inventory, this mysterious looming shadow inventory that nobody can really put their fingers on, well, there's obviously companies that track that stuff, and they track the likelihood of foreclosures, and that number has actually declined. That number actually went from 1.7 million potential foreclosures down to 1.5 million potential foreclosures. So that number's coming back also. So when you're looking at those numbers, they went from a 7 or 8 month supply of potential foreclosures to a 5 month supply of potential foreclosures. So that shadow inventory, instead of exploding like everybody says it's going to, is actually shrinking, but nobody's talking about that either.
Right.
I can forward the article to you, it's sitting on my desk, okay? So when we're looking at 2011, what does it take for a market to go back up?
Demand.
Okay, demand. Okay, so what's going to happen with demand? Demand goes up. Okay, when demand goes up, what happens to the supply?
Goes down.
Supply goes down. When demand goes up, supply goes down. That's when you're going to make this turn and start going north again. Okay, now, can we have individual pockets and individual waves of up and down for a little while? Absolutely. Here's 2011 right now. This could go 2012. Just stay flat and bouncing around a little bit because there's still a lot of economic concern out in the market. There's still a lot of fear in the market. Until we get past the fear and look at the facts, we're still going to bounce around along the bottom. But during that time, demand is going to creep up, supply is going to creep down, and that's what's going to take to make this swing. So what we're looking at is my prediction right now based on the numbers. If it continues in the path that it's been continuing to go on, I would say 2012, things are going to be flat, and there's going to be some potential for individual climbs, maybe even go up like this a little bit, and then make that sharp corner and go up. So here's what I'm thinking, and barring something crazy, in 2013 we should start seeing a swing go in the right direction, going north. This year we're already seeing a little bit of climb up in some pockets and a little bit of climb down, probably balancing each other out. But it's important that you know that this is how a real estate market goes. So is now a good time to buy? Well, if I was a betting man, which I am not, and I say you have potential for it to go plus or minus 5 to 10%, right? So you have 5 to 10% swing up or down. If it goes down 10% over the next year or two, not the end of the world. If it goes up 10% over the next 2 years, I don't expect that, but it could. Again, it's not the end of the world, but it's not the greatest thing in the world. It would be great, but not the greatest thing in the world. So up or down 5 or 10%, what does that leave you? 5 or 10% potential for going down. That leaves me with 90 to 95% chance of upside. So if I was to take you to the casino, Gina, and tell you, well, you got a 5 to 10% chance of losing, but you got a 90 to 95% chance of it going up. Do you want to play?
Oh, yeah.
Yeah. Yeah, you want to play with my money or you want to play with your money?
Yours, of course.
How about both, right?
Okay,
Yeah, let's just throw it all. I mean, let's borrow some money from Dan, borrow some money from Susan, let's go. I got 90% chance of winning. That's why the investors are saying, you know what? I'm cool with it if it drops a little bit more. I'm okay with a little bit of up and down right now because I know based on this market, based on what we've seen in the past, based on the fact that house prices are ridiculously low, builders can't even build houses for the amount they're selling them for right now. Prices almost have to go up. So you got a 90 to 95% chance in 3 to 5 years that your house you bought today is worth more money. So is now a good time to buy? Yes. Just based on a market cycle, now is a good time to buy. Pretty exciting, right? Good. So let's look at reason number 2. So reason number 1, good time to buy, based on a market cycle and based on the facts and the numbers that we're looking at through our Greater Tampa Association of Realtors numbers, we can document that the market has really slowed down, demand has been up, investors are buying, and it looks very likely that there's almost only a chance of upside. Are there things that could happen to drive it down? Yes. But it's more likely than not, we're going up. Okay? That was exciting. Woo! I'm all wound up about that one. Like we might actually get our heads out of our butts long enough to look around a little bit and enjoy the ride. Okay, so is now a good time to buy a house? What if you're already living in a house and you're thinking about buying a bigger house, okay? What do we call that?
Moving up.
Yeah, moving up. Moving on up, moving on. Right, okay, so this isn't good times, but it's pretty close, right? So move up buyer. So we're looking at the move up buyer. If you're sitting in a $200,000 house right now, and you want to move up to a $300,000 house, is now a good time to do that. Why is it a good time to move up in a market like this?
If you can afford it to buy a new one, if you're income and all that can maintain it, you can buy a new home for a very low price with low interest rates, rent out your former home if you can't sell it right now because rental prices are high now. There's
Agreed.
lots of renters, so you're sure to get a renter
Agreed.
that would pay the mortgage, so you're building more equity in there, and then you've got 2 properties to deal with, and
Okay.
you're an automatic investor.
Okay, so that's a great idea. Okay, so you move up, rent the house you have currently, ride both of them up in the market, make your money back on the house that you had, lost money on, and make the upside on the more expensive house. That's one good way to do it, okay? Let's just talk back to the real estate cycle again. From a real estate cycle standpoint, again, we got our circle here. If you bought your house at $200,000 here, what is your $200,000 house worth here?
150, 120.
Okay, so your $200,000 house that you bought is now worth less money, right? So let's say you own that house for X amount of years and the loss you've taken on that house is 40% over the last 4 years, 5 years. Would you think that'd be pretty reasonable in this market? Okay, so you've got minus 40%. Okay, bought the house in 05. If I bought the house in 05, it's worth 40% less in the Tampa Bay market than it was in 05 right now. We can quantify them one right after the next. 40% is a pretty good number. Okay, so the total loss you've taken on this house is how much? You've taken 40% off, right?
About 80K.
$80,000. I'm down 80 grand on that baby. Woohoo! Buy more houses. Yeah, if you keep buying houses like that, you'll be broke in 20 seconds, right? Okay, well, let's look at the other side of the equation too. $300,000 house, how much did their house go down in the last 4 years, 5 years? 40%, right? Okay, so you got minus 40% on your $300,000 house. What are you looking at on that one? $120,000 loss? Okay, so these guys in their $300,000 house are down $120,000 on their house. We're down 80, they're down 120. So here's the fun part. If you can get out of this house, or put it up for rent, and just ride that house back up, and buy over in the $300,000 range, the difference between the two is $40,000. Okay? Here's the fun part. I want to ride a small house price down a market, and when it's time to ride a market back up, I want to ride a higher priced house up. So if this house comes back up 40%, and this house comes back up 40%, if you make the switch now at the bottom of the market, here to here, bottom of that circle, you're going to go plus $40,000 just in appreciation on these two houses. $200,000 house is going to appreciate back up to $200,000 over the next 4, 5, 6, 7 years, right? $300,000 house is going to appreciate back up to $300,000 in the next 4, 5, 6, 7 years, right? So by making that move now in the bottom of a market, you have the opportunity for upswing of $40,000 just making that up move now. Is that exciting? Is that a good reason to buy? Is that a good reason to be a move up buyer right now? And we've got solid math to back it up. Now there's a couple other things we can add to this. Let's go to the next section. So now you've got real estate cycle. Because of where we're at in a real estate cycle, based on the numbers, based on the stats in the market, is a good time to buy. Good time to move up, because it's better to ride a more expensive house up in a market than a less expensive house up in a market. Okay? Well, that one's smooth. Quad the thing up. Okay, so what other reasons a good time to buy now? We talked about that on page 1. Okay, interest rates. Interest rates. Now's a good time to buy based on interest rates. So we talked about earlier, just briefly earlier, interest rates right now being around the 4.5 to 5% range. 4.5 to 5% range. Okay, so let's do a little bit of math. Now I've taken my handy dandy system here, wrote these all down. If you have one of these calculators, this is the most amazing tool. Dan's got one, I know. You've got one of these too, right? This is an amazing tool. This is your basic real estate master 3X by, I don't know what this is by, Calculated Industries. Okay, buy this. This is a great calculator. You can plug all the information in here to tell you exactly what your payments are. So I did the math ahead of time. So let me show you math on why now is a good time to buy based on interest rates. Interest rates are going to be real fun because this number gets big. And we can couple this number with the previous chart and it makes that savings, it makes that gain even bigger yet, okay? So you've got a $200,000 house versus a $200,000 house. Okay, the market's dying. Okay, two houses that are $200,000. Let me show you exactly why now, based on interest rate alone, having the same exact house, two different interest rates, what does that mean to you, real numbers? Why is this a good time to buy now? Okay, on a $200,000 house, at a let's say at a 4.75. 4.75% interest rate versus 5.75% interest rate. Okay, same house, 1% difference in interest rate. The principal and interest on the $200,000 house is going to be $1,043. Okay, $1,043 for principal and interest on that loan alone. Okay, the same exact house with a 1% higher mortgage interest rate is going to go $1,167. $1,167. interest rate change changes your monthly payment on the same exact house by $123 per month. $123 a month. Now, $123 a month is a lot of money. It's not going to buy you a car. It's not going to pay your car payment. It's not going to put your kids through college. But let's look at it over a long term. Okay? 1 month is nothing. Over the span of a year, it adds up pretty quick. When we look at the life of the loan on a 30-year loan, okay, this is a 30-year, this is a 30-year. Over a 30-year span, this $123 a month totals $44,000. Okay, so you take your same $200,000 house versus your exact same $200,000 house on the same exact piece of dirt with the same exact pool in the backyard, the same 2-car garage, 4.75 versus 5.75, total difference of $123 a month. But over the span of the loan, you're looking at $44,588 difference, just with 1% difference. So if we're sitting at 4.5 to 5% right now, and you wait 1 year, you buy the exact same house, you just threw away $44,000. Okay? So let's couple this 44,000. You want to make this real strong? Okay? Here's a great argument for you. Is now a good time to move up? Yes, we're going to move up. We're going to ride the market up over the next 4, 5, 6 years. You're looking at going plus $40,000, right? Now let's say not only do you move up, but you move up and you move up with a 4.75% interest rate versus a 5.75% interest rate next year, or 6 or 7% interest rate next year. Okay, I'm trying to be conservative here so we're not getting nuts. Take this $40,000, add to that 44. If you just bought a $200,000 house, this is more like 60-something on a $300,000 house. You're looking at now being in the 80K range. So is now a good time to move up based on riding a market up? Yes. Is it also a good time based on interest rate? Add that to it, totaling over $80,000 difference. That's a massive reason right there to move up now. So when you're looking at putting your kids through college, you're looking at paying off cars, you're looking at paying off stuff, you're looking at having a good time, in the next 15, 20, 30 years, would it be great to have an extra $80,000 laying around? I say yeah, absolutely. Yep. So again, same house, different interest rates, adds up $44,000 a year. Very powerful. Any questions? Okay, so you've seen market. Real estate market is a good reason to buy because statistically, looking at just the numbers, supply versus demand, and where we are at in sales, and the fact that investors are snapping things up left and right, and the average home sale price is climbing up, which is an indicator the bottom of the market's gone, is a good time to buy. Looking at 2 houses side by side based on the interest rate, and the interest rates being low, it's a good time to buy. Looking at the third reason being if you move up sale from $200,000 to $300,000 house, or $100,000 to $200,000, or whatever that jump is, it's a good time to buy because you'd rather ride an expensive house up than your less expensive house up. So the appreciation is going to be bigger, and the delta between the two of them is going to add up to a real number. And then the fourth reason to buy is if you are able to buy now based on the interest rate and you're doing a move up, when you compound those two, the number adds up to a massive number, looking at $80,000 plus, just on the simple example that we just showed. There's 4 good reasons with math behind it on why now is a good time to buy. Pretty exciting. Makes me want to go buy a house.
No, it's good.
Yeah. Any questions?